Hey traders, welcome back to the weekly Forex Forecast. Coming up next week, we have no less than 4 interest rate decisions, FOMC on Wednesday, with the SNB, the ECB and the Bank of England on Thursday. And on Tuesday, we've got US CPI. So it's a huge week coming up for the Forex markets. And in today's video, I'm going to show you the setups and the markets that I'm going to be trading in order to try and trade around these events at the right times. Don't forget guys, you do have 3 weeks left to get the brand new HedgeDash app for free for an entire year. New members to GMT in December and existing members of GMT will get HedgeDash free throughout the entirety of 2024. And for those of you who are interested, you can find out more by clicking the link in the description below. And you can also click the link in the pinned comment below. Okay, so if we look at the scores for the coming week, the first thing to note is the Swiss franc is now sitting at the top of the leaderboard and does also have a score above 50. So going into next week, Swiss franc long plays are my favorite setup. We do have the Swiss National Bank and the interest rate decision on Thursday. So what I'd like to do with the Swiss franc pairs is get involved with those kind of Monday to Wednesday and try and be in and out of those short-term trades and kind of be flat on the franc pairs before Thursday. So that way, you know, if something happens on the interest rate decision, I'm not on the wrong side of them, because interest rate decisions, you know, big news events, they are more of a gamble generally speaking, because even if you get the outcome right, sometimes you can see the markets discounting it, doing the opposite. So it's always going to be a gamble if you're holding through a large interest rate decision or a big news event. The second market I like to the long side going into next week is the New Zealand. This was on scorecards last week. It was in fact the top long, and it is still remaining in the long side of the scorecard. So I do like New Zealand longs. You can look at Australian dollar longs if you so wish, but the currency I really like going into next week after the Swiss franc and the New Zealand is the Japanese yen. The Japanese yen has now moved into the positive side of the scorecards for the first time in a long time. And this is suggestive of a real structural change in the outlook for the Japanese yen. And in fact, we did get the reading on Thursday that we were seeing extreme greed coming into the Japanese yen to the upside. And whenever you see this with dark green, it basically means you've got a 95% expectancy of pausing or reversing. And in fact, we had a big reversal on the Friday, the day after we got this data, roughly 1% to the downside. And if we have a quick look at the Japanese yen, you can see this big momentum that came into the Japanese yen to the upside. On the 7th, of course, that was when we got told, do not chase this high. There is extreme greed coming into this move, and you should expect with 95% expectancy a pause or a reversal in this market. And then we had the big down day following this data print. And why did we get this massive rally in the Japanese yen? Well, it was because of comments made by the BOJ governor, Ueda, and he said that policy would start to get difficult from the end of the year. And the reason why this caused such a rally in the yen was because the market had been pricing in hikes or tighter policy from the BOJ in April of 2024. But because Ueda said from the end of the year, bets of a hike out of the Bank of Japan were brought forwards from April 2024 to January 2024. So going into next week, I do like the Japanese yen for 2 reasons. One, we are now seeing it in the positive side for the first time, and this is suggesting more of a structural change to the outlook, as I said, in the Japanese yen to the upside. And also, we have a fundamental catalyst from last week, which points to further upside. And in fact, the third thing I like about the Japanese yen next week is that it's not subject to an interest rate decision like some of the other currencies that we're looking at. So for those 3 reasons, I do actually like Japanese yen longs heading into next week. Because of the extent of this move, and because we're still getting signs that this is way, way, way out of the ordinary and we should be treating this move with caution in the near term, I would like to see this pull back first, and especially if we come back and test the lower bound here, you can see prior high over here as well, the 0.67984. Look for this in the yen itself, because as the yen, if it pulls back and trades into this, this is probably going to be the area we're going to start to see not just the yen popping, but some of those yen crosses selling off. So aside from Swiss franc, New Zealand and Japanese yen longs, I do like going into next week US dollar shorts, Euro shorts and Canadian dollar shorts versus those three currencies. Now, what that means is I will be looking at US dollar yen to the downside, New Zealand dollar to the upside, US dollar franc to the downside. I'll also be looking at Euro franc to the downside, Euro New Zealand to the downside, and also Euro yen to the downside. And also CAD yen to the downside, New Zealand CAD to the upside, and CAD franc to the downside. Now, the only other issue going into next week is we have US CPI on Tuesday, as I've already said, and also FOMC on Wednesday. That really takes US dollar pairs off the table until at least Wednesday. So what I'd like to do heading into next week is between Monday and Wednesday, I will be looking for CAD franc to the downside, Euro franc to the downside, CAD yen to the downside, Euro yen to the downside, and New Zealand CAD to the upside and Euro New Zealand to the downside. And then from Wednesday onwards, after FOMC, I will start to look at US dollar yen to the downside and New Zealand dollar to the upside. And then after the SNB and the ECB on Thursday, I will be looking at US dollar Swiss franc and also Euro dollar, which of course we look at every single week, and I think would be a good backup currency pair to be trading if we do not see US dollar weakness next week. If we get the opposite and instead we get US dollar strength from CPI or from FOMC, Euro dollar would be a good market to pivot to. So instead of shorting US dollar yen or being long New Zealand dollar or shorting US dollar franc, I'd be looking at Euro dollar as a plan B Forex pair to reflect any US dollar strength. In other words, you can pivot to Euro US dollar shorts. Okay, so let's have a look at the markets going into next week on my watch list here, starting with crude oil. Crude oil is on the watch list every single week. Do keep an eye on it. And it has been a very good short to the downside. And going into this week, I do still favor short positions once again in crude oil. And because of that, I also like short crude oil derivatives. So you could be looking at Canadian dollar shorts, which we'll look at in today's video. You could also extend past that to the Norwegian krona, for example, or even oil stocks for those of you who trade equities. Coming into this week, you can see we've already started to correct in crude oil, and this does set up the opportunity to trade this intra-week. On the 6th over here, you can see we did get the hedge dash algorithm telling us that we're starting to register fear in the market. So with a 70% expectancy on the morning of the 7th, or in fact the evening of the 6th, we got the data to say right down here at the lows that this market had a 70% chance of pausing or reversing higher. And the idea of that is to prevent you from stepping in and shorting things at the lows or buying things at the highs. This is what often new traders especially get emotionally caught up in market moves. And that's what this is designed for. And you can see it has popped back and now it's turned grey, it's neutralized. What this means is this now the sentiment has washed out of this and this has neutralized, this can actually start to break down already from kind of the middle of the range here that we're looking at. If it's still extended, then you kind of want to leave it, wait for it to pause and correct, and then look for shorts. In this case, you can see we can already look for shorts essentially pretty much, Monday, Tuesday, kind of in the middle of the week down to the lower bound. So I am looking for shorts in this market. I'm going to start to look for potential intra-week breakdowns towards the 68.16. If we do not break down through here, if we just continue to pull back, and test, in this case, the 74.61, this is where intra-week you start to get the sign that you've got a 70% chance of pausing or reversing once you start to breach this upper bound. And I like it when these levels sit right at prior lows. For example, over here you can see a really nice key area of support here broken. I would not be surprised to see this come back, test as resistance, and this will be the second place next week. I'd look for a near-term short in crude oil. So short crude oil next week, looking for those opportunities, and short crude oil derivatives such as commodity currencies like the Canadian dollar, the Norwegian krona, and also equities like oil stocks. The first Forex pair we're going to look at is CAD franc. Now I do like CAD franc to the downside. The Swiss franc to the long side is the number one theme heading into next week. And of course, we just looked at crude oil and the potential underperformance of crude oil dragging now on the Canadian dollar and oil derivatives. So if we are going to get crude oil pulling back a little bit, I would not be surprised to see this push higher. One thing to note with intra-week trading and also trading at the upper and lower bounds next week is that when you have an interest rate decision, markets can often be choppy during the week. So I would rather short CAD franc from the upper bound next week than trade it intra-week. But you can, if you wish, start to look for intra-week breakdowns, as I do every week, usually in these markets, down to the previous low and the 0.64213. However, the main setup I will personally be looking for next week is if we can push into and above the upper bound here at the 0.65427, especially if we test these highs over here. This would be the area, say we trade into this Monday, Tuesday, that I'd be looking for a near-term short opportunity in CAD franc before the interest rate decision from the S&P on Thursday. So ideally, I'd like to be in and out of this trade between Monday and Wednesday evening. The next Swiss franc pair that I like to be looking at between Monday and Wednesday evening next week is Euro franc. Now, bear in mind, we have an interest rate decision out of both Europe and Switzerland on Thursday, so I really wouldn't want to be involved with this on Thursday because this market could get very volatile. However, between Monday and Wednesday evening, if we can get this market pulling back, and again, you can look for intra-week breakouts as we normally would, but during interest rate decision weeks, I would rather not do that. I would personally rather look for this to break the prior high over here and trade above the 0.95448. And this would be the opportunity to range trade this almost leading into Thursday, making the statement that if we do breach this upper bound, not only do we have a 70% chance of pausing or reversing, but it's potentially higher with interest rate decisions on the Thursday because you would expect no serious or significant directional move in this market. Notice again how very early on we got the sign that this market was pretty much done to the downside and it needs to pause, it needs to correct. We haven't washed out this sentiment to the downside, but we have started to correct. So I would not be surprised to see this correct more first heading into next week. And again, I prefer shorts from the upper bound in this market next week. The next Forex pair that I like heading into next week is CAD yen. Now, this is the third of 6 Forex pairs I like between Monday and Wednesday evening. And of course, you can see we had the big sell-off here as Ueda made those comments and pushed up the value of the Japanese yen itself. And you can just eye off, this was a major breakout of this range in terms of CAD yen, and we broke with momentum. I mean, this is telling us that this range now is pretty much done, and we should expect follow through to the downside. We had the sell-off, then we bottomed as we got that 95% expectancy reading in the yen itself of pausing or reversing, and now we're just consolidating. But I do think once this sentiment washes out next week, this is a market that is ripe for further downside. And unlike the Swiss franc pairs, we do not have an interest rate decision in either of these currencies. So I do like intra-week trades as well in this. You know, in the franc pairs, I'd rather trade them from their upper bounds. So going into next week, any continued pullback in this market is viewed as an opportunity to look for a breakout intra-week down to the 105.1596. And if we do pull all the way back and we test the upper bound here, and you can see we kind of have multiple lows right here as well, which again I like. If we pull back and we test these, a break above the 108.28 next week would be the second place. So if we just trend up, there's no breakout, we just keep trending up and then we break above the 108.28, this would be the second place next week. I'd look for a near-term short in CAD yen. Next is Euro yen. Now, Euro does have an interest rate decision next week. So again, I'd rather short this from the upper bound. If you want to trade intra-week, CAD yen would probably be a better one because it doesn't have that interest rate decision risk. And very often you see them chop into that, right? So any pullback in this market next week would be viewed as a potential opportunity to look for intra-week breakouts, but I'd rather not next week in this pair. I'd rather look for intra-week breakouts in CAD yen, if anything. However, if we do pull back and we breach the 158.25, this would certainly be a setup that I would be interested in next week. We start to break above here, I would be looking for a near-term short between Monday and Wednesday. And again, I'd ideally like to be out of this by Thursday because ECB on Thursday is a bit more of a gamble. You don't know what's going to happen with such a big news event. The other thing to notice here is the fact that we're now starting to see the Japanese yen in the positive side of the scorecards, the fact that we are getting closer potentially to a rate hike in Japan. This is really telling you where we are in the economic cycle. It is pretty common for Japan to be late to the party hiking. And usually, it starts to do that when trouble is already materializing. So I do think the other thing to pay attention to is, yes, we have seen a little bit of risk on recently, and until the data changes, I will be focused on some near-term risk on, but it does look like we're going to get risk off coming back into the picture, perhaps over the next few weeks or potentially over the first couple of weeks of January. The fifth pair that I like the look of between Monday and Wednesday evening is New Zealand CAD. Now, obviously with New Zealand CAD, it can be affected by FOMC because of the global reserve status of the dollar. However, this is another market we do not have interest rate risk with next week. So going into next week, you can see we've got a really solid uptrend. And although we've been kind of accumulating and just kind of moving sideways, I do like this for further upside. What I would like to see is, I'd like to see this pull back somewhat. And because again, there's no interest rate decision risk, I will be potentially looking at breakouts intra-week. Any breakout intra-week, I would be looking for follow through into the prior highs over here and above the 0.8402. This would be where I'd be looking to book profits in this area. And if we fail to break out intra-week, we just hold this trend and we continue to trend down, trend down, trend down, take out this low, and at the same time breach the 0.82350. This would be the second place next week. I'd be looking for a potential near-term long opportunity in New Zealand CAD. And the sixth market that I like between Monday and Wednesday evening next week is Euro New Zealand. We do have the interest rate decision out of Europe on Thursday, so ideally I'd like to be in and out of this by then. We can see this market, and this was a market highlighted to the downside in last week's video as well. You can see it started to chop. So what I'd like to see is I'd like to see this pull back, and because we have an interest rate decision out of Europe on the Thursday, I would probably filter intra-week trades here. So I would like to see this pull back, breach the 1.77450, because once we do that, you've got a 70% chance of pausing or reversing, and this would be the ideal setup next week to look for a short-term sell opportunity in Euro New Zealand. So anything which has an interest rate decision in it next week, ideally you would be looking to filter out those intra-week breakout trades, because the problem is it can be very, very choppy. In a normal week without an interest rate decision, you can get clean breakouts. With interest rate decisions, it can be choppy. The next two pairs we're going to look at, US dollar yen and New Zealand dollar, are from after FOMC. So we've got CPI on Tuesday, which can cause the markets to move, and then also FOMC on Wednesday. So I would really like to trade US dollar yen and New Zealand dollar after FOMC on Wednesday. Both of these pairs, I will be looking for US dollar short setups. So I'm not going to be looking to trade either of these to the long side. We're going to look at euro dollar as a potential plan B, but US dollar yen and the next pair, New Zealand dollar, are for US dollar weak setups. So you can see we had this big sell-off again on UADA, and then we bounced and found the low once we got that extreme greed reading in the Japanese yen. And coming into this week, this is just a big bear flag. Yes, it might need to wash out that sentiment a bit more, but any pullback in this market into Wednesday, what I'm going to be looking at is one of two things on Wednesday. Either we get the interest rate decision on Wednesday and this market breaks lower like this, in which case I'll be looking for a pullback and then a follow through sort of Thursday, Friday into the 142.86. Or if we consolidate, which is likely into Wednesday, assuming we don't get any big reading on CPI, we consolidate into Wednesday, and then what happens is we get a rally in US dollar yen. We take out these lows or even push through and test these highs here like this. This would be the second place I'd be looking for US dollar shorts versus the yen next week. Again, after FOMC. Now, if you're going to fade an interest rate decision, if you get a move to the upside on the interest rate decision and you're going to look to fade this for a near-term short, perhaps Wednesday evening or even Thursday morning, usually I like to wait the following day to get involved in fading interest rate decisions. The one thing you want to be careful of is that there isn't an extremely hawkish catalyst from the Fed. If they come out and unexpectedly raise rates, then you're not going to want to step in and fade the dollar to the downside. But if it's pretty much as expected, they hold rates and then maybe, Powell talks a little bit hawkish but doesn't say too much and you get this move higher, that's the opportunity to step in on a pretty much, a non-event to fade the initial volatility. So those are the two setups I'm looking at in US dollar yen post FOMC next week. Next is New Zealand dollar. Now this was actually a market highlight in last week's video to the upside, and I did highlight any pullback into the lower bound I'd be looking for a near-term buy opportunity. And this pullback, it did actually rally from the lower bound. We traded right into it and we had a big rally. There was a really good opportunity to buy that from the lower bound last week. However, it did go in the overnight session, so I was unable to take advantage of it. I was asleep, but there was a really nice move here. Going into this week, I like this market to the upside once again. So I'm going to be looking for pretty much consolidation into Wednesday, and then very much like US dollar yen. If we get a breakout on FOMC, I'm going to be looking for a pullback and a follow through Thursday, Friday into the prior highs and above the 0.6208. And if the opposite happens and we're just doing this and we consolidate, again, I can either buy this or do nothing. Selling this is not an option for me next week. So if we consolidate and then we get FOMC and we see New Zealand dollar sell off, and especially if we sell off quite hard and we come down, I always like to see if we can go through here, for example, and test a low like this. This would be the second place next week. I'd be looking to potentially fade that interest rate decision for a short-term buying opportunity below the lower bound at the 0.6040. Again, the only caveat is if we do sell off, I don't want to be trying to fade a very hawkish catalyst, like I said, if the US were to unexpectedly raise rates. So if it's pretty much a non-event, we get the sell-off, that would be an opportunity I'd be looking at Thursday, Friday. And the final two Forex pairs are US dollar franc and Euro dollar. And both of these, because we have an ECB and an SMB interest rate decision on Thursday, both of these markets I'll be looking at from Thursday onwards. So I am only looking to be short US dollar franc or do nothing. If we get through FOMC and also the SMB on Thursday, I'll be looking for pretty much the same setup as the other dollar pairs. If we correct and after those interest rate decisions we've broken down and we're correcting in this area, I would be looking for a follow through trade after the SMB on Thursday into the lower bound and certainly down at these lows at the 0.87146. And if the opposite happens, if we're just consolidating and then after SMB we actually break higher, we start to test above these highs over here and we breach the 0.8892, this would be the second place I'd be looking to potentially fade this market to the downside next week. And the final Forex pair from after Thursday's interest rate decisions with ECB I do like is Euro dollar. Now, this is a market that normally I wouldn't really be looking to trade this week. We look at Euro dollar every single week, but both of these currencies are kind of weak and it makes this market sort of neutral. However, the great thing about Euro dollar next week is it acts as a fantastic plan B setup because the plan next week is for US dollar weakness, US dollar yen to the downside, and I cannot be long that market. New Zealand dollar to the upside, I cannot be short that market next week. And also US dollar Swiss franc to the downside, and I cannot be long that market next week. So what if we don't get US dollar weakness, but instead we end up with US dollar strength off of the back of either FOMC or the ECB? Well, instead of going against the probabilities in those other markets, I can reflect that US dollar strength bias in Euro dollar instead. Because if you're going to be long the dollar, why would you be long the dollar against another strong currency like the yen, like the New Zealand, or like the Swiss franc, when you can just be long the US dollar versus a weak currency like the euro? So going into next week, I'm going to be waiting until after ECB. But if we're in a scenario where ECB passes and we get a breakdown in Euro dollar, because we do not get US dollar weakness, but instead US dollar strength, this would be the market I would pivot to, look for that pullback and look for the follow through into the lows over here, down below the 1.06579. And again, if come Thursday, we're just consolidating, we get ECB and we get a rally and we test this low over here and we breach the upper bound at the 1.0860, this would be the second place next week. I'd be looking for a near-term short opportunity in Euro dollar. But again, I wouldn't try to fade this in the face of US dollar weakness. If we had real US dollar weakness and this rallied into its upper bound, I would be going to something like US dollar franc, which would break out as this rallied up, and then I'd be looking for that pullback and follow through in US dollar franc instead of trying to fade this. Okay, so wrapping up the video with gold and silver, and because of FOMC on Wednesday, I would like to play gold and silver reactively next week. I think it sets up a really good opportunity to trade FOMC both ways, just reactively. No need to try and be predictive off of it. So I do favor gold over silver next week, which means going into next week, if we get US dollar weakness from FOMC, I will be looking at trading gold to the upside. And if we get US dollar strength from FOMC, I would rather, alongside euro dollar shorts, I would also rather look for silver shorts next week. So setting up gold and silver to be reactive from FOMC. So any pullback next week, if we get FOMC come out and we see gold rally because the dollar weakens, I will be looking for a pullback and potentially an inch-week trade into the upper bound over here at the 2031.63. And if we continue to trend down, and we trade into the low over here, and we're down here after FOMC, this would be the opportunity to look for a near-term long opportunity or buying opportunity in gold. And finally, we have silver. Now, the reversal in silver is really, really strong. And in fact, last week I was trading risk on setups, as we discussed in last Saturday's video, and they worked really nicely apart from this. This is a market that I got my fingers burnt on last week. And going into this week, as a result, I do favor further downside, especially if we can get some kind of bullish reaction from the dollar on FOMC. So again, not trying to be predictive of FOMC, just being reactive. If we get dollar weakness, I'll be looking to buy gold. If we get dollar strength, apart from the Forex pairs we've discussed, I will also be looking at potentially shorting silver. So going into next week, if we consolidate, and I would expect this to pull back a bit because this has sold off very, very strongly, I'll be looking for this to pull back, to consolidate. And then coming into Wednesday, if we get a break lower, I'll be looking for a potential pullback and a sell-off into the 22.21 to reflect the bullish bias in the dollar. You know, again, perhaps what if they did come out and unexpectedly raise rates, even though that's not being expected, and I don't think that's going to happen. It's just an example, hypothetically, of a bullish catalyst which would increase the value of the dollar, and we might want to start to trade dollar to the upside, right? Remember, the base case is for dollar weakness. But if we get that dollar strength, at least we can reactively pivot and we can look for a short in silver. Alternatively, if we just kind of consolidate and we rally and we start to break highs over here, especially trading to resistance, and there's another one over here, and we're above the 23.73, this would also be a second place next week. I would consider potentially fading silver to the downside for a near-term short opportunity. So that is it from me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I go through the best markets as well as sharing the real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, anyone who signs up to GMT in December also gets the brand new Hedge Dash trading app completely free for 12 months. This offer expires at the end of December.